What's going on, everybody? It's Tone with another video again. Y'all know what's up, man. This video I would just be simply talking about creating cash flow investments, especially with real estate. Especially, when you're looking to get a rental and stuff like that, you want to run the numbers on, what makes a good deal, whether it's worth even investing and getting that loan. But basically what you want to do is you want to make sure that these properties that you got, that you're gonna rent out, cash flow. So what is cash flow? Cash flow is basically your profits. It is, at the end of the day, if you got a rental, yeah, you're gonna, let's say you get paid $800 every month from it. Yeah, you're gonna have $800, but you still got expenses. If you got a property manager, then you gotta pay those expenses. You got property taxes, you definitely gonna have to pay them, because IRS don't play. Any other services, whether it's garden services, any other expenses, like I said, whether you got a property manager, you definitely gonna have to pay property taxes. Any maintenance issues, you always want to have enough money if any emergencies happen, whether water heaters, any expenses that you don't see are coming. You always want to have money on the side as an emergency fund, whatever it is, to cover those expenses. But no matter what though, like I said, you want to make sure that you are cash flowing every single month. So if I got a house, a rental, that I'm renting out for $800, I want to look at the numbers of how much my monthly mortgage is going to be, how much utilities, any services that are fixed costs. Fixed costs meaning that you're going to have to pay them no matter what, and they're the same every single month. You want to write those down and then kind of get a good estimate of how much your variable costs are, which may they might vary from month to month, but you just want to get you a solid number. You rather have a higher number than a lower number, because that way you will be better safe than sorry. But at the end of the day, you want to cash flow. So if my total expenses are, let's say $500, and I'm renting out for $800, at the end of the month I'm gonna cash flow $300, which is good, because like I said, every month that you're paying your mortgage off, you're building more equity on your name and on your property, and then you will get more money every single month that you get to keep. The faster that you pay your mortgage off, usually be 15-30 year loans. But like I said, if you are profiting $300, you times that by 12, 24, 36, so $3,600 every single year, and that's only for one property. And then once you pay that off, but it'll be free and clear. You can subtract that mortgage from your expenses, and now let's say in a couple years or however long it takes you to pay it off, one, you got equity built on your name, so then that way you can refinance or whatever, but you also are making more money monthly. Let's say your mortgage was $300, now you only got to pay $200 every month for expenses, and then that way you're cash flowing $600 once you pay it off all the way. 600 times 12, 24, 36, 48, 60, 72. So that's $7,200 every year, and that's only with one property once you are free and clear. But obviously, you will also want to get more rental properties on your portfolio, especially if you're looking to build a financial freedom, and you just want to have more income coming in, more money, because you can't survive off of $3,000, or even $7,000. The more properties that you get, you'll be building your income, building your rental portfolio, and yeah, your cash flow gonna be flowing. But yeah, like I said, especially when you're looking at these properties that you're looking to acquire, to buy, to rent out, you're gonna take that risk of getting that 30 year, 15 year loan. You want to make sure at the end of the day, once you run these numbers and see how much you're cash flowing, you also want to look on your return of investment, your ROI, and if it takes you $1 million just to make a couple hundred or a couple thousand, obviously that's not a good ROI. You don't want to invest in that. That's not a good investment. Typically a good investment is between I would say 6% and above. That's still kind of conservative. A great investment is definitely 10% and up. Anything near there, that is a great one. Anything besides that, you can probably you want to compare them, like where else could I put my money, the opportunity cost of putting that money. If you learn a little bit of economics, you can either put in the stock market, where usually you earn like 5 to 7% from what I've seen, or you can, obviously with real estate, you can get higher returns on your money when you invest it in real estate. But yeah, you want to look at to see if a property, how much it cash flows. One, you want to make sure that you got enough cash flow to cover any unforeseen expenses, which do happen, and then you also want to see what your return on investment is. Run those numbers, look it up on, if you want to see more details, just look it up on YouTube, look it up on Google. This is still something I'm still learning. Like I said, 2020 definitely gonna get my rental portfolio up. So this is something I'm gonna have to do. I know basically the big picture and overall what I'm doing with it, but still want to learn as much as I can, because you will never learn everything. Especially now with real estate, somebody tells you that they lying. There's so much to learn. Like I said, look at your return on investment and look at your cash flow. That way you can determine if it's a good investment or not, and see how much money you're gonna make. So yeah, like I said, man, appreciate y'all watching. Like, subscribe, let me know what y'all think. DM me. It's your boy Tony and I'm out, man. I'm about to catch y'all another time, man.